Thank you for coming out this afternoon in attendance at this press conference and for diverting your attentions from whatever else might have been occupying you this Saturday afternoon. The principal subject that I wish to address in my opening remarks will be the performance of the economy in the first half of 2014, given that we are now at that point where we have substantially completed collection and compilation and analysis of data on the main metrics of economic performance for the first half. You would all, of course, recall that on the 24th of March 2014, Budget 2014 was presented to the National Assembly under the theme, A Better Guyana for All Guyanese. You would also recall that that budget speech, which I had the honor of presenting on behalf of this government, recorded and reported to the nation on the achievement of an 8th consecutive year of positive growth in real gross domestic product, 8 uninterrupted years of positive growth, and projected a continuation of this positive trend through 2014. You would recall, too, the various policies, programs, and projects outlined by Budget 2014 aimed at continuing this trajectory of strong economic performance, specifically continuing our uninterrupted trend, our trend of uninterrupted growth in the economy, our uninterrupted trend of fiscal consolidation and strengthening public finances, our progress in improved delivery of social services to the people of Guyana, our progress in expanding and upgrading the infrastructure that is so critical to both catalyzing continued economic growth and improvements in quality of life for the Guyanese people. You would, of course, also recall the process of parliamentary debate on Budget 2014, which led, of course, to the National Assembly withholding its approval of a number of critical programs and projects contained in the budget that itself has now become the subject of considerable public commentary and debate. And I won't digress into extensive comment on that matter because it's already the subject of considerable commentary by a number of my colleagues, and I have spoken on it before. Notwithstanding the challenges encountered in the parliamentary process and the inevitable consequences that these challenges have for the political and by extension the economic environment, we as a government take very seriously our responsibility for ensuring that the environment in Guyana continues to be an attractive one that is conducive to attracting investors, that is to say investors from outside of Guyana, and indeed promoting and incentivizing investment by domestic savers and domestic institutions and domestic households, accumulation of savings and making of investments. We take very seriously the objective of ensuring that the conditions exist for steady improvement in the quality of life of all Guyanese people. And for this reason, and with this commitment in mind, we have persevered in the implementation of Budget 2014 in order to ensure that this favorable environment that we've worked so hard to create and to improve steadily is preserved and further enhanced going forward. It's important to bear in mind too that in addition to the complex domestic political situation and the inevitable implications that this situation would have for investor confidence, growth, etc., it's important to bear in mind that we're also operating in an environment of considerable external challenge. The global economy and indeed the Caribbean economy continue to be tentative at best. The signs of recovery from the global economic crisis of a few years ago, those signs appear to be, I would use the word tentative at best. We are by no means at a point where the global economy is in rebound and sustained recovery. We have not seen a return to steady and uninterrupted growth in the major economies of the world, and we've certainly not seen that achieved in the Caribbean. In fact, many of our sister Caribbean countries continue to face very severe economic challenges, particularly because of their limited opportunities for diversification. Indeed, it is the progress that we have made in Guyana in diversifying our economy that has enabled us to withstand some of the global and regional economic realities and still achieve the kind of growth that we've achieved. With that background, I would say that is the background against which we have had to manage the economy during the course of the first half of the year. I'm pleased now to report that in the first half of 2014, the economy recorded overall growth of 3.2% in real gross domestic product, within which non-sugar GDP grew by 2%. So I'll repeat that for clarity. You would recall that in recent years we've been taking sugar out because of its significance and indeed its fluctuations and volatility in recent years. And so overall growth in the economy, overall growth in real gross domestic product in the first half of 2014 was 3.2%. And within that, the non-sugar economy grew by 2%. We are now projecting growth in the full year at 4.5% overall, and in the non-sugar economy, 3.6%. Within that economic performance, I will spend a few minutes sharing with you some of the disaggregation, some of the sectoral highlights that contributed to that performance. There are a few sectors that have continued to perform extremely strongly, return extremely favorable outcomes, and which have contributed significantly to the achievement of the growth. Yet another half year of growth, or extending the 8-year stretch of uninterrupted growth. Within the sectoral highlights, one will observe that the rice industry continues to perform extremely well. Rice, as you would know, has been recording historic highs, historic peaks in its performance. This year we achieved yet another record first crop in 2014. The first 6 months of 2014, the first crop of rice of the rice industry yielded 312,283 tons of rice, representing 18.3% growth over last year's previous record of high, or previous high record. Sugar showed some signs of recovery. You'll recall that the sugar industry had an extremely difficult first crop last year. This year we have seen some signs of a rebound in the first crop, and sugar production in the first half of this year amounted to 79,995 tons, which was 66.5% above the 2013 first crop. Forestry, the forestry sector also recorded strong growth in the first half of 2014. In fact, that sector grew by 38.1%. Which obviously is an extremely strong performance, supported by the introduction of new incentives to harvesters in the sector. The one sector that did not grow by the rates at which it has been growing in recent years, and in fact contracted this year in contrast with its performance in recent years, is the gold industry. You would know, of course, that gold has been doing very well in recent years, driven largely by the favorable investment environment that we've created in Guyana that has attracted a lot of investment to the sector, but aided also by very strong external market prices, world market prices. Gold declarations in the first half of this year were in fact lower than in the first half of last year by 17.2%. Amongst other sectors, manufacturing grew by 11.2%, aided, of course, by strong performance in both rice and sugar, both of which have a significant manufacturing component. Construction continued to do extremely well, growing by 16.8%, reflecting continued strong investment in construction, both in the private sector, industrial, commercial, and household or residential construction, but also public sector investment in construction. This is roads, bridges, schools, and other public buildings. The wholesale and retail sector grew by 6%, information and communication grew by 3.5%, and financial and insurance activities grew by 2%. On other developments, the overall balance of payments deficit was considerably smaller in the first half of 2014 than in the first half of 2013. We recorded a balance of payments deficit of $93 million US. You will have as against $145.6 million US last year. Still on the balance of payments, still on what we describe as the external sector, excluding gold, exports, total exports recorded a very favorable performance. Total exports excluding gold grew by 4.3% to $307.5 million US in the first half of the year. Within that, sugar exports grew by 26.4%, rice exports by 14.9%, timber exports by 31.3%, but gold exports contracted by 24.6%, reflecting, of course, the decline in total declarations, total production, and of course reflecting some measure of price developments. In other sectors of the economy, I have said on previous occasions that developments in the financial sector are a very important and very significant barometer for developments in the rest of the economy. And so I have highlighted in successive years, and I'm not unique in this regard, in fact, performance in the financial sector is taken generally as a good correlator to performance in the economy as a whole. And in some the key metrics that are observed include, in particular, foremost amongst them is net credit by the banking system to the private sector. Net domestic credit by the banking system to the private sector in the first half of 2014 grew by 2.9%, which reflects, again, it's consistent with the level of growth that we're seeing and some continued expansion. This growth was driven principally by mining, construction and engineering, and real estate, which grew by 10.3%, 7.6%, and 7.5%. Other sectors that contributed to the growth in credit by the banking system to the private sector include rice milling, other services, and manufacturing. The consumer price index, which is used to measure inflation, in fact recorded a marginal decline from the December 2014 level by 0.4%. So the CPI in fact declined, which points to negative inflation from December 2013 to June 2014, reflecting, of course, continued stability in major commodity prices in the domestic marketplace. You would be aware that we have mechanisms in place to stabilize the price of fuel. Fuel has been relatively stable in the world market. There has been some upward movement, but relatively marginal. And of course, we have mechanisms domestically to mute the pass-through of those fluctuations. Undoubtedly, the contraction in gold and the challenges that the gold industry is facing with respect to world market prices would have influenced the disposable incomes being generated by that sector, which would itself have translated into reduced upward pressure on prices and other commodities in the domestic economy. On the fiscal side, the non-financial public sector recorded a surplus of $1.7 billion in the first half of 2014. Our debt has been moving in the right direction too. Our total external public debt stood at $1.23 billion at the end of June, which is 1.6% lower than at the end of 2013. The same trend is observed in relation to our domestic debt. I know that I would have listed several numbers there that, unless your fingers are very quick, you might have missed some of them. But at the end of the press conference, I'm going to ensure that an electronic copy of all of the points that I have made is distributed along with the full text of the mid-year report that is now completed. That report, in addition to an elaboration of the what I would have just reported, that report also documents some of the major highlights in the main sector, some of the things that we've been doing in infrastructure, roads, bridges, air and air transport, river transport, sea defenses, drainage and irrigation, the social sector, education, health, other infrastructure sector like electricity, and information and communications technology and others. In general, I would say that given an external environment that continues to be challenging, one where the global economy is still somewhat lethargic, where the regional economy is still experiencing significant challenges, one where commodity prices are still moving in unhelpful directions, oil prices are still high, gold prices are still low relative to recent years. Given the domestic challenges that we face, which are particularly political in their origin, I would say that the achievement of growth of 3.2% in the economy in the first half of 2014 is a most commendable achievement. And whilst we in government are under no illusions about the importance of the work that we do and have to do to preserve the environment, the achievement of this level of growth and the sustaining of this growth over the protracted period of 8.5 years point clearly to investor confidence and investor optimism, and indeed point to growing competitiveness, growing resilience, and growing competitiveness and productivity in the Guyanese economy, something that can only be achieved by both entrepreneurial effort and also worker effort too. And so the contribution of the private sector, notwithstanding the challenging environment, the contribution of the role of the private sector, the contribution of the private sector, and indeed the working people of Guyana must be acknowledged as we acknowledge the growth that we've achieved and as we recommit ourselves to sustaining it going forward. I will stop there. I'm happy to take questions in the first instance on the performance of the economy in the first half of the year, but as you know, I'm never one for restricting the range and scope of questions that are posed to me. So once we would have disposed of the questions on the half-year report, which, like I said, you'll have the full text of within a half an hour of us bringing this press conference to an end, you'll have the full text of the mid-year report, along with the bullets that I just highlighted. Once we would have disposed of questions on that subject, then I'm happy to take questions on any other subject matter. Thank you very much.
Minister Dennis Shibral, sir, could you say what has been the contribution or savings through the Petrocaribe scheme with Venezuela? And
Sure.
I may have a follow-up.
Sure. I wouldn't be in a position to tell you now in quantitative terms exactly what the amounts are. I will say that some of that data has been available. I mean, as you know, the budget tables include a table on external debt. The mid-year report indeed includes a table on external debt that has a line that says Venezuela, that is principally Petrocaribe. But I will say that Petrocaribe has had a very I will say that Petrocaribe has had has worked very well for Guyana, because we have been extremely prudent in how we have managed the Petrocaribe mechanism. And as you know, in Guyana, Petrocaribe has not only resulted in the making available of financing through our oil purchases from Venezuela under Petrocaribe, but very importantly has also provided a market for rice produced in Guyana. And so that mechanism has worked very well. We've been able to supply literally hundreds of millions of US dollars, and the numbers have been reported publicly over time. Like I said, I don't have them at my disposal immediately, but if you peruse successive budget speeches, you would see that I think we've now reported the concluding of 3 or 4, if I'm not mistaken. I believe with this mid-year report, we've now concluded 4 debt compensation agreements. I think the current mid-year report reports the conclusion of the 4th debt compensation arrangement, under which the Petrocaribe debt that is owed by Guyana to Venezuela is written down, written off, cancelled, in exchange for the rice that we would have supplied. And so the arrangement has worked very well. I want to be very clear and definitive about that. I don't have the numbers at my disposal right now, but I'd be happy to get them on a subsequent occasion. They're actually available publicly, but I mean, I'd be happy to help to save you having to do the research yourself and having to plow through several budget speeches to extract them, if you wish.
Minister, what assessment is being done by the government with respect to the future of Petrocaribe in light of the economic circumstances in Venezuela, as well as the political uncertainties there?
Well, we're not unmindful of both the challenges that are being faced by Venezuela right now. Neither are we unaware of the debate or discussion that is taking place across the region and indeed elsewhere about the future of Petrocaribe. I will say that in our instance, we are considerably less vulnerable from the fiscal standpoint, from the indebtedness standpoint. We're considerably less vulnerable than some of our sister Caribbean countries that have been participating in Petrocaribe, because what is different about Guyana from some of those countries is that whereas in many of the other Petrocaribe participating countries, debt has been accumulating and now has to be serviced, in Guyana's case, much of that debt has been written off by way of rice that has been supplied. And so the vulnerability from that standpoint is considerably muted, considerably reduced in Guyana's case, because we have paid back a lot of the debt by way of rice supplied. There is, of course, the reality that as a result of Petrocaribe, Venezuela has become an important market for our rice. And so we recognize, too, the importance of not being overly dependent on a single market. And you would no doubt be aware of the efforts that are being made and indeed the progress that has been achieved with respect to ensuring that we have other markets for our rice. We will continue to seek out the best possible markets for our rice so that our rice producers continue to get the best possible prices and are able to sell the highest possible volumes in keeping with the investments that they've made to expand production. So I would, like I said, I mean, I think much has already been said, including by the Minister of Agriculture, on the work that is being done to secure and expand other market opportunities for the rice industry. But Venezuela continues to be an extremely important and valued partner under the Petrocaribe arrangement, and I would like to think that Petrocaribe has been implemented between Guyana and Venezuela to the mutual benefit of our two countries. I believe it has.
What I was trying to get at, Minister, is what what contingencies are in place in terms of dollars and cents? Is Guyana catering for a possible collapse of Petrocaribe should the political and economic circumstances in Venezuela change for the worse? And how will that impact on our coffers and on the treasury?
Well, I think I answered that. First of all, we're not anticipating a collapse in Petrocaribe, but we recognize that we can't necessarily assume that this arrangement will continue indefinitely. But we're certainly by no means anticipating a collapse in Petrocaribe. We are hopeful, in fact, that Venezuela will continue to recognize into the long term the benefits of Petrocaribe when implemented as it has been implemented between Guyana and Venezuela. I think with respect to implications with respect to dollars and cents, as you said, or the public coffers, I think I answered that. Our exposure on the side of the debt is somewhat less than it would have been otherwise if we had not been supplying rice to write off the debts. And so the debt that we owe to Venezuela has been significantly reduced by virtue of the fact that we have sold rice to Venezuela and the debt is written off. The corresponding value of the debt has been written off. In relation to the market for rice, which is a market that we enjoy under Petrocaribe, it remains to be seen whether that market remains available in a post-Petrocaribe world, if ever we get to that point. In any event, we are continuing our efforts to secure other markets, like I said. I know it's a Saturday afternoon, so you've been kind with me already. I'm happy to take any other questions, if there are none. Are there any other questions? If there are none, thank you very much for coming. And like I said, very shortly, you will have an electronic copy, or an electronic copy of the report will be, and the main highlights will be distributed electronically.
Minister, do you have an estimate as to how much more money you've been spent since the submission of the last statement of excess?
I wouldn't be able to say.
You don't know?
I didn't say that I don't know. I said I wouldn't be able to say at the current point in time.